Hey guys, welcome back to the Finance Notes. I know you guys missed me, so I'm not going to keep you waiting. So we're just going to get into what we're going to be doing today, easy equities. I know, it's been a long time coming episode, and finally, here it is. So let's go. So what is Easy Equities? Easy Equities is a low-cost investment platform. It was founded in 2014. What they say here is that they created Easy Equities to address inequality in access that millions of South Africans face when it comes to investing in the financial markets. So what sets it apart is that it essentially doesn't work like the other platforms, where if you're buying a share, it's that fixed price. If you can't afford that share, then you have to look for some other type of share. With this, you can buy any share literally at any time, as long as you have some of the amount required. It's basically fractional shares. And this also makes them incredibly cheap when compared to other investment platforms. So we know what it is, but what does it do? Easy Equities sells shares, plain and simple. And if you don't know what a share is, don't worry, just keep watching and I'll explain it. Essentially, to sum up a share, it's basically like buying a portion of ownership of a company. So let's choose ShopRite, for example. It's a popular retail store, right? But it's also a holdings company. But let's just focus on it being a retail store. So ShopRite goes IPO. This just means initial public offering, meaning that we now offer shares to the public. So you can buy a portion of the company, or you can be a contributor to the company's growth and financial well-being. Great. Now that we know how that works, ShopRite starts and says, our company is valuated at this amount. Maybe it's 1 million. And we need about 1 million in contributions. And now we're going to sell a share for each and every person to be at least 2 rands per share. So that, by the end of the year, we at least have this amount of money to upgrade our stores or whatever we need the money for. So it's kind of like ownership rights. But at the end, you know that you are expecting a return. If ShopRite performs great, you're going to be getting something out of it. If ShopRite doesn't perform well, there's nothing you can do. You've just lost that money because you're not part of the majority stake or the board of contributors. There's people who contribute like larger shares because they're actively involved, if that makes sense. But essentially, shares are a small portion of the company of ownership with a lot of people combining efforts, I guess. The exception here on Easy Equities is that you can buy a share. If ShopRite says our share is worth 2 rand, that's 1 share. With Easy Equities, you can invest 1 rand. And that's the great part. And you can still earn interest on that at 1 rand. So that's what makes them affordable. So you don't have to wait until you have 2 rands at the end of the month. Again, this is just an example, but that's how shares work. Now, I want to point out the difference between a savings and an investment. Those are 2 different things, and you should know these when you get into this sort of field. I wrote this down. So a savings is low risk, short term, and has specific goals in mind. So this is built or designed to protect your money. So it's like kind of freezing your money in place. It doesn't yield a lot of interest back. It does keep your money worth the amount it was, with a slightly smaller portion that contributes to the initial amount. So savings should always be maintained. You should always have a savings account, even without it yielding a high interest. Preferably, you should look into savings accounts with high interests, and you know that it's going to protect your money and is going to be secure. With that said, there's a lot of different companies popping up now and offering different savings accounts. You should pay special caution to those companies. Rather just keep it with the bank because they already have firm, structures, and they are well established and are well known. And so therefore, you know that they're not going to run away with your money. But yeah, you could have 3 different types of savings account. It could be an emergency savings account, very popular. It could also be like notice deposit savings account. This is when you put a specified amount of time. If you withdraw the money before then, you get charged a penalty fee for withdrawing earlier. I did explain some of these concepts a bit on one of my previous videos. You can check that video out. I don't know if it's here or here. You already know how it is. So yeah, the savings account attributes to those kinds of things. You can save up as little as 1,000 rands in a savings account, up to 500,000 rands, although this is purely objective, depending on how you feel your money should be placed. But anyway, it's debatable how much you should really save in a savings account, because at some point you get capped and there's taxes involved. But essentially my whole point is you should always have a savings account. Do not have a savings account. So then we come to an investment. What is an investment, you ask? An investment is high risk, long-term, and volatile. So this is going to be high rates of interest earnings but it's going to be a lot more riskier. And depending on how much you've contributed, you have a higher chance of gaining more, exponentially more, or significantly less. Most of the investment companies offer security investments, but those are usually when they have caps, and you don't want that. You don't want caps. Investment is for long-term goals, remember. So this is like investing the millions. You have millions in the bank account, you go for investments typically. So that's all there is to understand. And what is Easy Equities in this equation? Is it a savings platform or is it an investment platform? It's an investment platform. Simple to understand. Easy Equities helps you build on your long-term goals. What is long-term? 5+ years, like 5 years, 10 years of investments, which yield a higher return. There's all kinds of products when it comes to investment returns, but we're not going to get into that because it can be variable. What is one thing I will say is do not trust like insurance firms with your investments long term. They often have higher fees than most conventional platforms, kind of like Easy Equities. Easy Equities is a lot cheaper. This is not financial advice by any means necessary. So please, if you're looking for financial advice, you know where to go. Maybe I'll link the link down below, but it is fairly easy to search on Google. So Easy Equities focuses strongly on investments, usually with high yield, and most of them are segregated into 3 categories. So there's the low risk appetite, the moderate appetite, and the high risk appetite. This is when you stand to lose more in the high risk, and you could also gain more. Moderate to high is usually when you're, like in the in-between, and then the low is self-explanatory, right? So Easy Equities sells a bunch of different types of shares. Let's preface that by saying this. It sells shares according to their categories. I would call these investment categories. So there are several types of categories you can invest in on the platform of Easy Equities, but I'm just going to be mentioning the 4 most profitable ones or most common ones. However, keep these with a grain of salt. Eat these with a grain of salt. How would you eat something metaphorical? All right, so I wrote some of them down. And when we start getting into how to buy a share, I'll show you some of these categories. So they go as follows. 1, equity. An equity is the same as a share. So you're buying a share from a specific company, like it'll be one entity. 2, it's an ETF. An ETF has bundled companies inside of it, like the best performing companies usually. 3, international property, bonds, and commodities. I lump these into the same category because this is not our focus for this video. And 4, crypto. Crypto is the most popular one, and crypto is extremely volatile, but crypto can also be very profitable. So these 4 are further having their own divisions. So for number 3, I'm going to skip right over international property, bonds, and commodities. And we're just going to focus on equities, ETFs, and crypto, because those are the most popular ones, arguably. So for equity, remember I said you could buy a share from a single company. And this can either be a local company or international companies. So this can depend on your risk appetite. Normally when you're buying an equity, it's because you have a firm understanding of how that company operates. For example, in South Africa, that company could be Truworths, the clothing or retail store for clothes. It could be like TFSA, which is a local bank. You know how it operates, you are used to it, and you know when it's usually going to be underperforming. Hopefully you do your research, and there's all types of news you can look those up on. And then there's international companies such as Apple, Netflix, Google, all kinds of those. If you buy from that specific company, that's an equity, or that's a share from that company. So that's the extent of equity. Second, we have ETFs, electronic traded funds. I'm not sure if I'm correct, but from my understanding, it's electronic traded funds. Basically, this is like a basket or a trade basket of other best performing companies. So like all of the companies I just mentioned, you could like have a bundle of companies in the same industry. So for example, Truworths, Markham, Woolworths in the same basket if they're the best performing companies. Now, the nice thing about ETFs is that they're usually secure and less volatile. So yes, it is a basket that mitigates volatility. Basically, these are usually secure and are some of the best performing ones long term. So an investment, remember, is long term, and all of these things I just mentioned are long term assets. So you have to have a plan of more than 5 years if you're investing in some of these. If you're hoping to even get a fruit out of this, they also have an international version. Usually this is Australian or US I haven't seen the UK. I think they also have it, but I'm not quite sure on that. But usually international companies bundled into one. In tech, for example, the big FANG, Facebook, Apple, Amazon, Netflix, Google, FANG. All of those companies could be bundled into one. And all these ETFs are owned by different companies. Some of the most popular ones include Signia, 10x, and in South Africa it's Cetrix as well. There's all kinds, but it's different entities that own or copy basically the trade or mimic the trade of how the companies in their baskets are performing. But yes, an ETF is essentially tracking a performance. It's a performance-based tracking purchase, if that makes sense. You're free to pop it down in the comments. Type down whatever you want to ask in the comments, and I'll try my best to get back to you. And then finally, there is crypto. Crypto is crypto. You can literally look up the meaning of crypto, but I'm pretty sure everyone is familiar with it. The most popular brand of crypto is Bitcoin and Ethereum. And there's other kinds like Dogecoin, which is sus, but I'm just going to stick with these two because those two are a lot more reliable than others. So Bitcoin and Ethereum. If you have any recommendations, please again, pop them down in the chat and let people know what you invest in. However, please take these with caution. I cannot emphasize this enough. So what might be working for me might not work for you. So it's very important to understand this. As I'm about to show you how I buy a stock, particularly an ETF, which is my best recommendation. An ETF is a lot more secure and yields returns of 10% plus, usually after 10 years and stuff like that. Another nice thing about Easy Equities is that you can easily withdraw all of your money if you feel like it's unsafe. You just link it with your banking account and you're good to go. As soon as you do that, you can either buy with your account in a recurring value or you just buy it once off. It's up to you. And yes, if you ever feel like there is some sort of discrepancy, you can withdraw quick. When I was starting out, I think Easy Equities offered me 350 Rands to start my investments. I could choose any ETF or any equities. That 50 Rand is very helpful and it takes you quite a long way. And you can grow profits from that 50 bucks. So I don't know if they still offer it, but I'm gonna try and put my referral link. I'm basically not gonna get any money from the referral. What I am gonna get is something called an easy credit, but it's basically not exchangeable for money value. It's more like, yeah, it's just nuanced the way that it's used, but yeah, just know that I'm not gonna be getting like money from it. One thing to know about investing in equities or ETFs or buying anything from the platform is you should always do some research on it before you buy anything. Go on Reddit, go on Google, do your ChatGPT searches and have all of the full information. And know your timelines. How long are you planning to do your investments? Because some pay out in 1 year or 2 years, and some are dividend paying, which is really good. You really want most of your stocks to be dividend paying. What this means is that the company is going to give you a portion of that money and say thank you for investing with us, even though you didn't make any interest on that amount, but they are going to give you a dividend just for holding stocks with them. So I recently doubled down on Tiger Brands. Again, this may not work for you, but I just bought Tiger Brands stock. I'll show you in a second how my setup looks. And keep in mind, I haven't been doing this for very long, so I don't have a lot of money in there, but this is just to show you how much you can invest. Some people go for the 10,000 yard, some people are in the 100,000s, and some people are even in the millions, But I'm in the low brackets, like literally just starting out, sort of. So I'm the perfect example for someone who's starting out. Like you could use my videos or my guides on how to do things. And I have profited this way because I haven't lost money technically. Yeah, just be aware of such things and do all of your research. Again, like I've said, there's a bunch of videos that I have watched when I was starting out. I don't know if it's been so long. I don't know if I can share some of those channels here. Look up all the information or vet the information before you just jump into the platform. That's my strong advice. Just search about Easy Equities and make sure that you have a firm grasp and understanding. And there's all types of videos like this one that you can look up and people actively showing you how to invest. And my last tip before I share my screen is always buy red, don't buy green. Green is when you withdraw. And I wouldn't recommend you withdrawing all of that amount. Just withdraw a portion from the interest. That's a clever way people do it, I guess. And if you've watched this far, don't worry, I'll show you exactly how to invest in Easy Equities step by step. So now I actually want to show you how to invest. I'll maybe share my screen down here and you could see how I do it. This is when I was buying a stock just this morning. I was buying a Signia stock, which is an ETF and has low risk to it, right? And it's popular.
Here is the dashboard.
The dashboard has our portfolio. So everything we've invested in, it shows up here. So as you can see, this is all of the monthly dividends that I receive. It's been more than this, but I'm not sure if it's updated yet. I think I received about 2 rands of dividends, but you can understand it's not a lot because I haven't invested a lot. So here you'll notice there is a small tab right here as you scroll down. These are all the equities, or the shares rather, that I have. You can buy individual equities. Remember what I said those are. And then you have a retirement profile, properties, and crypto, as well as their new version of trade. I don't have a lot of information about this, so we're just going to skip right over it. And then there's a demo section. These are all just quick access tabs or panels. Basically everything that we were talking about. I have equities right here. You'll notice this is, I blurred out the number here of what I have. Don't worry, I'll show you how much I have. It's not a lot. And then right here, I have a US profile. And then as we scroll down, you can have additional accounts. Australian markets, there's United Kingdom. I wasn't sure if they had them, but now I can confirm that they do have them. And then we have the European markets, right? And finally, there is the retire pocket where you can have your tax-free savings account. I think you are allowed to save about 36,000 rands a year in South Africa, or a lifetime contribution of 500,000 rands, meaning that any amount that you save above that amount will be taxed. Great, so this is going to be a retirement annuity. You can actually transfer your retirement annuity from another platform directly here, which is such a cool thing. There's other types of, retirement funds. I had forgotten the word there, sorry. So yeah, preservation funds, living annuity, blah, blah, blah. And then there's properties. I don't have any investments here, but like I said, I blurred out my values so you can't see that. And there's the crypto tab that we talked about. This is just purely crypto. I just want to show you in a second. This is the trade which I said we'd ignore. So yeah, that was the dashboard, and you've seen all of the panels that they offer. It's really that simple. So this is the value of your growth, and you can track it by month or in 3 months. As you can see, I've had like decent returns. I wouldn't say the greatest, but yeah, right now I'm receiving flat rates, and when I was starting, I actually got significantly a lot of money. It's not a lot, but you see I've close to 3,000 rands, and there's times when I withdrew some of the amounts, and I had to, it was variable. I had a method that I was using, but I'd rather right now just keep everything stable, and we'll invest a lot more going into the future. But for now, so let's get into the ZAR account. This is the main account, or the South African portfolio. I'll show you in a second how much I have. So right here is how much you have to invest. As you can see, I have nada, but I bought a stock, and we'll show you the demonstration of me buying that Signia account, that Signia ETF. Sorry about that. So as you can see right now, my total value is about 800 bucks, and I've just recently invested this morning. So you can see that Signia that I bought is already making a return, given that it's not a lot. So this is the purchase value, how much I bought it for, the current value, how much it's worth now, and the price, right, at which you should buy 1 share with. And you can notice that is a fraction of this, because 1 share is about 73 rands, and I bought only 50 bucks, and I'm still making profit. Right now, the profit is current value minus purchase value gives you that amount there. And you can see I have Tiger Brands, which paid out a dividend this month, which I had like 50 bucks just this morning, and then I decided to close my other holdings, or stocks rather. So this is a stock, it's an ETF, as you can see, sorry. And then this is an equity. And then this is also another equity, because you can see there's individual companies. I'm going to double down on the Signia because it's a lot more stable than these two, because these are extremely volatile. As you can see, Truworths is making a major loss right now. So yeah, when I bought it, it was making me a lot of profits, but now it's like gone down recently. It's one of my oldest holdings. And yeah, I have the US market. I didn't invest a lot, but the one that I have has been paying rather well, about $14, as you can see there. And it's an S&P 500. It's just a lot more stable, and it's from the US. And you can see the actual share there is about $400, which is quite a lot. I didn't have $400, so I invested whatever I could, which is about $14. If I'm not mistaken, that's about 250 bucks. But yeah, I bought it when it was 13 bucks, so you can see the difference there. I made $1 from that. At this point, you can basically just sell it or buy more of this. But remember what I said, this is green, so I can't buy more. Now I want to show you how I bought the ETF, the Signia ETF, quickly. All right, so
we're going to go to our Invest Now tab. That's where we're going to find our stocks. So this is my watch list. There you'll see all the stocks that I am aiming to buy in the future once I have money. And these are the categories that I was telling you about. So you'll see here there's equities, ETFs, crypto assets, property, commodities, and bonds. You can buy any of those, but ETFs are the most popular. So you'll see here there's different markets, all these different markets here and different, ETFs. You'll notice everything here is an ETF. What we want specifically is Signia. And here are all the different markets and products as well from different regions. So we're just going to search Signia quickly. Signia, there we go. Right. So you're going to see there's different types of Signias here all across the board. But the one we want is the MSCI World. We have already seen it, but just to show you the difference here, they all have different prices and they all specialize in certain markets or things. This is the S&P 500 and different prices. This one is 20 Rands right there, and this one's 53 Rand. This one is 58. You see, they're all different prices. I don't know why my mouse is doing this. Here's the one we want, so we're just going to click on it. Ooh, all right, let me fix that quickly. Because my Easy Equities is linked, I'll be back in a sec. All right, so now we have 50 Rands loaded from my Discovery account because we linked it with my Discovery account to the Easy Equities. So as you can see, this is the ETF we want, and its risk appetite is quite aggressive, which means that it can yield you a lot of profits. Like I told you, there's different levels. Cool, this is going to be added to my watch list. So you'll notice here, this is 73 Rands. That's your starting price. What is happening with my mouse? 73 Rands starting price, and that's one share. So if we're typing that on, it's gonna, let's say 74, that's gonna give us one share. That's their asking price. Buying at ask, that's exactly one share. So because we don't have 74 Rand, we wouldn't be able to buy this normally. So we're going to add in what we do have, and it's going to show us a fraction of that, which is 0.68%. As you'll notice, I have $50 exactly. So I'm just going to type in what I have. So that's how much I'm willing to invest in. And you'll see the investment cost is 13 cents. So when we buy it, there's no rush. We just buy it as it is. Has 50 Rands, and they're going to deduct their 13 cents from that. This graph right there is quite important to track the history. So we see there 3 months, 6 months, a year. This stock has been performing well up to the max in the previous years. It doesn't mean it'll do like this all the time, but it shows promise. So why not buy? Might as well just click it. And stock bought. Congratulations. So you'll receive an invoice in your email account that has this specific stock. And now you're going to be able to add on that stock whenever you want to. But I hope you enjoyed this review. Let me know in the comments. And as always, I'll see you in the next video. Bye.